And as a result, you see EU continuing to dump and dump and dump and clear the next low and the next low and potentially the next low.
Several days later.
Oh my God.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and in this video we're going to be talking about the letting it run strategy. So as you might recognize, in the previous video we made a video a few days ago when price was around here, and I spoke about the importance of going from left to right in your own analysis and your own thought process when looking at any market and recognizing where you are from a left to right bias, right? Like figuring out that you're in this 3-box setup, thereby making this the overall target that we're working towards, which we've been doing for a while now. And as a result of that, being aware of how intermediary structure like this structure right here begins to create liquidity in the market, or create, you know, this dumbfound idea that we're going to be long from here and long from here and long through and any of these areas, rather than recognizing that because the market's been bearish, it's most likely to remain bearish and most likely going to continue in a given direction. So part of today's video is actually introducing you to a concept that I personally think is very vital in your own trading, and that is to let something run. Now, the reason that this concept is very, very important in your own trading is because, and I talk about this a lot with my private mentorship students, which, you know, access to the mentorship is available in the link below. If you don't want to join, that's perfectly fine. But something I bring up a lot is that it's a lot easier, and in my case, a lot better, to pursue a system that has high RR and low win rate, okay? Rather than the opposite, which would be a lower RR and a high win rate, right? Now, the reasoning that I believe that this is to be true and that this is always going to be better in every realm of the way is because to increase your RR or your bottom line or the percent that you make any given month or year or week, whatever it might be, is actually rather simple, right? It's a question of conducting your data analysis, understanding what your trades on average can run, can do, what your best trades look like, and then basically increasing the overall RR on your target. So for instance, right now, I'm personally in this trade right here. When I got positioned today, you know, my overall targets on trades are, my edge is found in the fact that I'm looking for high RR within my trades, and not found in the sense of I'm going to try and take as many longs or shorts as I can within the market, targeting tiny little partials back and forth, huge pip stop losses, waiting for something to hit finally that I can take a small profit off of, have 3 TPs set up. That's not the kind of trading that I've excelled with, and that's not the kind of trading that I teach. However, of course, you can make it work for you. But in this video, we're going to break down why it's so necessary to understand that this right here is a lot easier and will actually add your bottom line over time, and how part of just holding a move can add big time to your bottom line without you actually doing much. So in the case of a higher R low win rate strategy, it's a lot easier to increase the RR per trade or per setup that you have by, you know, 1%, 5%, 10%, or more percent, doesn't really matter, than it is to increase the actual win rate. Because to increase a win rate of a strategy, you need to either completely reshape your strategy, change certain elements of your confirmation, of your long-term confirmation, changing a lot of elements like that, potentially, right? Maybe increasing your stop, making your stop much bigger, maybe taking faster partials. So to increase your win rate by even 1% or 5% or 10%, it could mean completely reshaping and remolding your strategy, which is a very hard thing to do. On the other hand, if you have a normal strategy that you have an entry criteria that you used to get in every time, like the 3-box, like the Wyckoff 3-box, like the double MB as taught in the private mentorship, like the triple M, like the CS entry. These are all private mentorship concepts. However, you have access to a great confirmation on my YouTube channel here. But whatever it might be, when you have that confirmation met, so in the case that we have a normal box breakout, so 3-box breakout, you have your actual impulse that created that breakout, you have your S&D as a result of that, price makes its way back into the S&D as part of the mitigation, gives you your Wyckoff scenario setup, you take the entry, right? And there you go, now you're in. The beautiful thing about having a strategy that relies on a low win rate, but a higher R, is that if this was your entry, All you have to do to make this edge better over time, let's say it's a 20%, 30%, 40% win rate, is increase your TP just like this to areas that might make more sense, or to larger TPs. As you know, my first TP on any trade I take is always 10 RR. So it's very easy to do that, and now you've added to your bottom line over time with any trades that you're taking. However, if this specific entry criteria isn't getting you a high win rate, you need to now reshape and mold a lot of different things onto the strategy. You might have to reconfirm certain areas. That's one thing you could do. You might have to increase your SL big time to accept for a lot of drawdown to be wrong before it goes into profit. You can bring down the RR on your setup for your first partial. And what's going to happen is you're going to develop a system when it's based around this low RR high win rate kind of thing that will, slowly make money. Just like this, and maybe it's high, but on the losses, it's going to have a big dent in your system, right? And in some cases, some people do fine with this kind of strategy, and they're okay with those dents. And those dents they're happy to work with, But what I've noticed for a lot of people, especially my own students that have pursued this kind of lower or high win rate, although some of them made it work for themselves, but what I've noticed a lot of the time and why I've seen a shift in a lot of traders to this high RR low win rate is that as you keep doing this, a streak of bad price action or bad setups can lead to a very, very big drawdown in your account that might be much harder to work around, versus a system that does the opposite, which focuses on much higher RR and significantly lower win rate. And what happens is your curves start looking something like this. You take your small losses over time and you get some minor runners. You take more losses over time, you get some minor runners. You take some more losses over time, you take some mild runners. You get some more losses over time, you start getting bigger runners. And all of a sudden, you're at all-time new highs within your system because you're basically painting a picture of a real edge onto your system, right? Because what's occurring is over time, when you end up being wrong or right or whatever it might be, that's when the big runners come in, and those big runners can decide basically if your account's going to continue to climb and climb and climb to new and higher highs, right? That's the idea of higher highs. I talk about it a lot in webinar like 63 or 64. I talk about it a lot, and it's the idea that if you understand this idea of all-time highs and how your account's not always going to be at them, when your account gets to all-time highs, you can undergo not years, but you can undergo weeks of drawdown. Just normal trades. Maybe you get a bad boy that maybe equals out your tops, but keeps on doing this. But eventually, you're going to see that your edge that is found within these big runners that you can't always predict. That's what creates new all-time highs in your own personal account, which is very quickly a reason as to why I always prefer the higher RR, lower win rate strategy rather than the lower RR, high win rate, for a lot of people asking. And personally, from a lot of the stuff that I've studied growing up as a trader and learning as a trader, most of the multi-millionaire traders that are made in the markets, whether it be Forex, stocks, commodities, whatever it might be, are traders that have focused on and created edge around the idea of a very, very high RR system rather than a low RR system and a very high win rate, from what I've personally noticed. Now, again, you can go out of your own way to study this kind of stuff. This is, of course, biased on my point of view, but from all the stuff I've studied, the stuff I've read, edge for a lot of traders that have made a lot of money in the markets always comes from a higher R system, because a higher R system means that you don't have to really do much. And at some point when you get the runners that you're looking for, as I will show you with one of my trades this week, actually, a trade that I took today, that is absolutely a banger, my best trade of the entire year so far. And I'm still holding this, hoping that it, comes and takes the 100 and the 200 RR as the overall bias, as per the last few videos that I made, on my channel, talking about how short EU has been, how it's going to remain short, and how it's going to keep on most likely going short. And even in the last video, when I spoke about the idea of intermediary structure by thinking from left to right, how this was most likely going to start taking this out. And that's exactly what we got positioned on. And as a result, we're seeing this success translated to the students in my mentorship as well, and to the people around me. We've had a number of people get funded this week, which is amazing. Mentfunding is doing great. So if you're someone that has, has locked in a system, check out mentfunding.com above. But, as we go through this, we had the Punisher. I remember him, absolutely beautiful. I mean, he just posted this again, same thing. Outlook, most people are long on this, still long on this. People are trying to long zones here. People are trying to long the support here, right? I spoke about this last week with you guys, literally on, so right now it's August 18th. I spoke about this with you guys, I think on August 15th, about how price is most likely going to come and liquidate all of these lows and continue liquidating lower because it's been bearish and it's going to move bearish, and the left to right is showing us that it's going to be bearish. And as a result, we're coming to liquidate this, and more likely than not, anyone that's positioned in this market, regardless of whether they look at the candlestick structure or not, the candlesticks or not, right? You can be doing this with a footprint, a DOM, whatever it might be. They want to get long, and they're positioning their stops here, 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 and more likely than not here, as per the 3 box that I highlighted for you guys in the last video right here. And this is the box that created this impulse. And as a result of this box, the expectation is to continue clearing out lows. As simple as that. We keep our trading simple, but that's what allows us to excel in market conditions that finally set up for us. And, as I jump back into here, I've had a number of people get involved today on the same thing, right? We had the Punisher get involved on the same thing, and he's now taking it lower the same way. He's still running on it with me. I think we had another member, I think it was James, he's funded with mentfunding, that absolutely murdered it down. So, this was me managing it. It was about to look to close here, but it never broke, so continued going short. I'll show you guys that here in a second. It's just absolutely beautiful price action lately. So right here, we were about to manage the closure above this high, but kept going, and it's just milking downwards. But as I show you this, we'll scroll up to see if we can find this. It's high-key absurd what people in this mentorship are achieving. Again, don't worry too much about that. But the point is, these aren't moves that are just kind of out of nowhere. Like, no one expects these. We expect these moves every single week and every single month. And the way we do it is exactly what I teach you guys here. It's identifying where you are in a 3-box scenario on a higher time frame to a lower time frame, identifying what the most likely target is going to be next, and then using the 3-box across time frames to get yourself positioned. And, I'm going to show you the 3-box that I got positioned on today during my session. So my session starts at around 9 a.m. Started my session around right here. Price at that point kept breaking down. It was already in a bearish bias, but broke down again. You can see I was looking to sell this point here. I never got a retrace there. Kept breaking down, broke down again. Had my S&D, supply and demand, right here, sponsored by this little inefficiency right here, therefore being a valid supply. Look to get involved here. I'm not going to break down my entry here. The breakdown of my personal entry and everything that I did in terms of management is always reserved for the mentorship, and I will be going over that on Sunday for anyone that is interested in that. Every webinar is on Sunday. But missed the first entry, so this never got tapped. It just missed it barely. Got tapped into this one, broke even, I believe, like around here. Price began to break down. 10RR met, so it took 50% off. 25RR met, took 50% off. Look to close it based on the Dow Theory, or the double MB, as I teach it in the private mentorship. Never gave me a double MB and continued breaking down. Didn't hold this S&D at all. Again, showing you a great example of something I teach you guys on this channel day in, day out. S&Ds are not made to be held. When they hold, you're going to get great entries, right? Boom, we get great entries, and then we can hold them out. But when they don't hold, that's when you start to milk a market, because when S&D start to fail to the downside, when intermediary supply and demand zones that are being watched by every retail or dumb money trader, right? Anyone that's watching to buy this guy or now this guy are most likely than not going to act as liquidity, because on their charts there's nothing more than just big zones that they don't know where they're going to buy or sell at, rather than an overall understanding about what the market is doing, what it's showing you, and what the next step is going to be, right? So this is the idea of right, so I spoke about this so many times. I even showed you guys from personal clips from the mentorship about how we were bearish on all this all the way down, bearish all the way down, bearish all the way down, bearish from here all the way down, bearish in here all the way down. And even in the last video, I spoke about how we're going to be bearish, and we're probably going to come and liquidate all these intermediary lows that people are starting to think is bullish structure again, right? Thereby liquidating the herd, right? Which is most likely, let's go to the outlook sentiment, which is most likely going to be on the very long side, right? And as a result, you can see exactly that happening with the people that are short in my group on the XXX USD pairs over and over and over again, with a great understanding as to, where the lack of understanding for a lot of people come from. And that's from a lot of people trying to force, once again, those longs on the prediction that this is finally the spring, the final low of the market, trying to force it on the fact that we're finally getting some kind of inner structure break here. It's building a channel, it's building a trend line, whatever it might be. There's multiple reasons at any given point, not even just from candlesticks, right? Across the board, from DOM, footprint, anything, that there's a good long. But the reality about most markets, and when you hear stay with the trend, is that they're going to remain with the trend, right? And when the trend is showing you it's short, it doesn't mean you want to force the longs into shorting areas, right? Because that's not what we're after. We're after identifying the boxes we're in, the 3-box methods that we're in. Again, check out my 3-box strategy videos if you don't know what I'm talking about here, because a lot of my YouTube channel is a buildup of understanding rather than here's a new video, do this, my new strategy that you can now use to become profitable. It's not the case. Everything I do is a buildup on this YouTube channel because it's teaching you it from the very starter point to exactly where I have progressed to, where my members progress to, what my members do to personally get funded. Again, not financial advice at all, but what they personally do to get funded, how they get funded, what they do every single week, and how they're able to ride out on positions the same way that I do, right? They get to catch the same stuff and they fully understand why they're holding certain points, why they're doing what they are, how they're targeting certain areas. And it's all based on this idea of letting something run. So to basically summarize what I'm trying to get at here is, one, be aware of where you are in a market and a target that you have as a result of that awareness. Now, when you have a target, also, as you get involved on a 3-box or whatever it is, right, recognize that if it's with the smart money, those moves can become large and they can become large fast. And over time, your job isn't to just to be in every single trade that presents itself. Instead, your job is to be in moves that follow your rules, and then as a result end up running unprecedented amounts that, I didn't even expect, right? I expected this trade to come down, maybe even break even, didn't break even, got my first partial, then expected it to come back up. It never did. And it kept going and it kept going. I looked to manage it potentially if it were to break again. Didn't happen. And now we're riding on this. And I'm looking to take it significantly lower to once again liquidate the overall lows that I was telling you guys we were going to look to liquidate and continue to liquidate the last few months. The last few months on my channel, all I've spoken about, and I hope you guys are bored of it because everyone keeps making the same mistake, is how bullish UJ was going to be. And we saw exactly that happen. How bearish EU was going to be, or the XXX USD pairs. And as a result, you see EU continuing to dump and dump and dump and clear the next low and the next low and potentially the next low, but already the intermediary lows. And as a result of that, we're able to get positioned. And as we get positioned, because we are now being familiarized with the idea of how this creates a much better edge in your own system, we can now hold out positions and just manage them as they go, right? Because again, I don't know that these huge moves are going to come out of the air, right? I know that EU is short, and I know that I'm going to try and get position short, and that the shorts can be rewarded very heavily, especially when most of the market is longing for no apparent reason. And most people that hate the fact that my videos have continuously spoken about the fact that EU is going to remain short, it's funny because people are bored of me hearing... People are bored of hearing me say that EU is going to remain short. It's going to remain short. It's still short. I'm still following short. And they keep making little comments in my YouTube videos going, hey, Anton, thanks for this, but you need to show us something new because, you've been telling us a lot that it's going short, but it's like, there's a reason I'm doing that. There's a reason I keep telling you guys the same thing, and it's because the same thing is repeating itself consistently. And it's as simple as being able to recognize the 3-step system that I teach you on this channel, as well as in my private mentorship with a little bit more depth, right? If you're not able to do that, or you get bored by me saying this, but you're not making money and not profitable and not getting funded with mentfunding.com, well then, why are you leaving a comment saying you're bored hearing the same thing? If you're bored hearing the same thing, go and execute upon it. Because that's what trading requires of you. It requires you to be bored and requires you to do the same thing over and over and over again. That's exactly where the best traders, that's how the best traders form. That's how the best traders succeed, and succeed over a long-term period. They get used to one setup. It's rather simple. They get really good at it. They understand how it works with the context of a market. They start understanding what they can do in any given condition, and they execute it. And that's all they do for the rest of their lives. And that's how they make money. And that's exactly what I'm teaching you to do here. However, you need to make the innate decision to actually follow through with something as simple as, hey, there's 3 boxes you need to draw. The rest is mostly experience. So let's put you to the test. Let's put you to work. And as a result, when I get positioned on a move like this right here with an overall short bias, as I'm looking to go short based off this beautiful 3-box, and again, I'm going to break this down for you guys really quick. I come on around 9 a.m. I saw the breakdown in structure. Actually, I kind of missed this personally. Let me see what I got here. Yeah, I missed this personally, but as this broke down, this is the S&D I should have been watching. Came down, pulled back, broke down again. There's a new 3-box, right? It's an overall, once again, bearish market that has been bearish for a very long time, and it remains to be bearish. And now we're getting a 3-box setup during a liquid session, right? Something I teach you guys as well on my YouTube channel. Look up session sauce. And as price comes into my unmitigated supply and demand zone as part of a 3-box setup, right? So just to showcase this box to you guys, you have box 1, box 2, box 3. I look to take a short. I miss my first one. I get in on this one, and we're off to the masses. Now, again, I could break down all my trades this week. I took, before this, I actually took 2 more or 3 more break evens personally. I don't think I took any -1s this week, which is absolutely beautiful. Yeah, I took a B in here looking for shorts. I was looking for shorts here, but nothing ever set up for me. I actually took a long in here, but I took an instant B on it before it ran. I wasn't trying to take that very high, but you know, we can play back and forth in an area. And then we had an absolutely beautiful setup today, and it all matched up. All the stars aligned. You know, the planetary cycles became beautiful. The moon set, whatever the fuck, and we got involved. And as a result of it, you know, I didn't expect it to do anything crazy, and now it's up over 50 something RR, and my next target is set at around 100 RR right here. Took about 50% at each level. This is the actual secured amounts. Again, remember, I'm not risking 1%, so I'm not securing 17% on this trade. That would be absurd. I mean, you know, for someone risking 1%, it wouldn't be absurd. It would be perfectly normal, but I don't risk 1% on my trades. And we're just running on this. And as a result, you know, it's not something that just fell out of the sky like some crazy little gospel shit, and I read the golden bricks and I figured out that this is the way to trade. No, we have plenty of members in our own mentorship that caught this bad boy too, you know? Let me see where I can, yeah, 100%. Like caught in the similar area, I think. I don't know, maybe a little bit different, but again, same idea, same understanding about where we are. This is EU as well, right? Keep going here. I saw a few people get in on the EU play. I just don't remember where they all are. Yeah, we had James FX take it down. I know Steve. I know Steve caught the EU down as well, right? Same area it looks like. It was price of 01612. What did I get in? 01612, 016. So he got in on this area here. 016666666. 6-1. So he got in above me, it looks like. I think he got in on this POI right here off this 3-box, which is absolutely beautiful, right? You have consistent and tons of setups like this that happen day in, day out. And the question basically is, are you willing to be bored? Right? Because I need you guys to show up to my videos and going, this guy's about to talk about how EU is going to be bearish again, and how he's been correct on it for the last, 5, 6, 7, 8 months, 9 months. How does he keep doing it? What is the special sauce that he's not teaching me? Nothing more than following exactly what I teach you. The 3-box strategy, left to right, keep putting in your targets and keep following it over and over and over again. That's all I do every single week, and that's all you have to do. But the question is, are you going to commit to it, or are you going to keep on going from person to person, from mentorship to mentorship, from YouTube video to YouTube video, from strategy to strategy, and continue confusing yourself along the way, from new concept and new marketing concept to new marketing concept? You know, watch it. BOS, find your 3-box that created the BOS, find the S&Ds that created that. Recognize that price does not have to come up to S&Ds as part of my videos, right? Recognize that the next target is still here. Recognize that within price action, we're still looking for shorts. And even though it looks like it might be going long, it's not, because the price has been short. It's remaining short. We're going left to right. So we know the target's still down here. Lower time frames, as they begin to shift to the downside, we're aware that we want to be short and sell from short areas. However, we're also aware that when a market is short, it's predominantly going to retain its shortness. So we look at the 3-box that was created intermediary, and we're aware that this is the next low we want to aim for. Hence why you see me taking some shorts here, and why I took the shorts here to come and continue liquidating these lows. And then because of that, you notice that once again, liquidity becomes a byproduct of our understanding. Notice how I didn't have to sit here going, here's my equal lows, we have to liquidate them. No, instead I go, that's the 3-box that's bearish, that has just came in bearish, right? From a bullish market condition to a bearish market condition on a 4-hour, a bearish 3-box, within an already bearish 3-box that it wants to take out the next low, within an already extremely bearish market that has been putting in bearish 3-boxes for the last 6, 7, 8, 9 months. So I'm going to expect to go short, so I can either, one, wait for price to get here and look to short it, or use a lower time frame range in here to get short on a 3-box again. When can I do that if I really want to do it? Probably during the most liquid sessions within the pair I'm trading. When are the most liquid pairs on the pair that I'm trading? You know, we can do it as simple as this if you really want to do it. You can open up just a volume thing right here and literally go like this. You see these big volume spikes? Zoom out a little bit and say, okay, there was big volume from here. Here, we're going to make it black. We're going to make it really black. There we go. From there until around there. Then there was big volume from around here until here. Then there was big volume from here until here. Then there was big volume from here until here. Big volume until here until here. So when is that? Let's see. This was from, so now again, we can zoom in now. Take a look at when those were. This was from around 2 a.m. until 4 p.m. So that basically is London session and New York session. Okay, when's the next one? About 1 a.m., 2 a.m. until about 1 p.m. London and New York session. Okay, 1 a.m., 2 a.m. until about 11 a.m. London and New York session. Next one, 1 a.m., 2 a.m. until about 11 a.m. and then volume dies down. New York and London and New York session. Here we go again. mentfx with the repetition to try and bore you all. 1 a.m. until around 1 p.m. Sounds like London and New York session. So what can we expect if we're in an overall short bias on a higher time frame with an overall 3-box liquidation here, as well as a lower time frame, so in this case a 4-hour that has just broken bearish again within a bullish scenario within a bearish range. Bearish, what can we aim for? The lows. So either we wait for our zone or during a liquid session, which exists when? From 1 a.m. till 11 a.m., London or New York session on EU at least. So we can come in and look for those kind of setups, the 3-box setups, because that's when smart money or big money or the composite man is going to be present and look to get involved. So 5-minute, 15-minute, 1 minute, all fine variables. So as I get on at around, because I sleep at 1 a.m., right? Because it's 1 a.m. for me, because that's London. So that's 1 a.m. EST. So I'm asleep from here until around 9 a.m., which is when I get on. This is just about when, there we go. This is about when, so London ends, New York is pretty much beginning, or New York and London are overlapping just a little bit. And guess what? Big money comes into the market, remains a certain shift in the market. So again, watch my session sauce video to get a little bit more information on this. Remains its bearish shift, so we're probably going to retain the bearish move. Look to confirm it here. Doesn't give it to us. Move on the range. Forget the S&Ds. Don't get attached to your zone. There's no point. Zones are made to be fail. I'm forgetting English. Crazy. Zones are made to be liquidated or fail, and zones do not get always pulled back to. However, smart money is going to permit at some points that a 3-box holds, sets up, and takes you to the promised land. And in this case, we keep following it. We get another breakdown. I'm going to get rid of this volume now because we don't need it, right? The only reason we should use volume is to understand when the liquid pairs are, liquid sessions are. We get a breakdown once again of a new structural range. We create a new 3-box from this high to this low, otherwise shown as this box right here. And now what have we done? We've created a low that we can target within an overall market that is still short, with a low that we can target based on this 4-hour range, which is still within an even higher time frame, right? So that's this guy right here. That's that 4-hour that we can have a low that we can target because we're allowing ourselves to work with the lower time frame ranges within a still overall bearish market, so we can keep going bearish during a session that has liquidity coming into it. And as a result, what happens? Well, we get involved and the price runs. And because I'm not focused on a high win rate, low RR system, I allow myself to wait for the big RR for it to hit with my low win rate, right? Because I'm taking break evens usually, -1s usually, until the big runners come, because that's what my edge is found in. That's what I personally created a bias around, and that's what I teach my students to do. We come down, we hit our first partial, I take it off because I don't know if this is going to keep running. I don't care, right? The understanding is that we're in a bearish market within a bearish range that just became bearish, within a 1-minute bearish range that is within a liquid session that we can now take short. It's ran its first point, doesn't have to keep running, but it does. Great. We take another partial. What does it do next? It fails to keep running and begins to break up. So what am I going to look to do? Manage the trade by getting out if it breaks again. Does it do that? Nope, fails all the way back down, doesn't even hold the S&D. And guess what? S&Ds are made to do what? Fail and not hold. And why is that a good thing? Because when you're positioned in a trade, you're about to liquidate every single person trying to buy this market. And when you have And when you have a market where you have a huge percentage of retail or dumb money or dumb smart money, whatever it might be, trying to long the market, you know that you're in on the right-hand side and you can just take it lower as you need to. And as a result, I'm in a trade that I can now let run and run and run. And is it something that was God sent that I saw that no one else could see because I have the eyes of a fucking warrior? No, it's because I'm following a simple 3-step process that I teach to my students that are able to follow the exact same thing and understand how they can do it for themselves and grow independently and do this for themselves every single day. And because we have a way of viewing overall ranges and understanding where the price is most likely to head. Just like I've showcased to a lot of you, for anyone here that's sitting here going, this fucking hindsight trader. For anyone sitting here doing that, check out any of my recent videos where I showed you guys a lot of the clips from our own webinars where we analyze the markets and create our outlooks way before they ever happen. They're all posted there as well. And you guys are going to see me say it's going to be short, where I'm aiming for, why I'm heading for a certain area. You're going to see me break that all down. And if you're in the private mentorship, I don't even need to convince you because you guys are there and you already know what's up and you guys are killing it yourselves. And congratulations to like the 6 members that got funded this week and last week. Absolutely beautiful, guys. Congratulations. Right. And the last video I uploaded for you guys was recorded during this point where I told you most people, even though it might go long, are looking to long it. And this structure that they think they're holding, right, on that daily, because they're not using this rule of left to right and understanding where they are within a range, probably going to get liquidated, probably going to start taking out the lows. And guess what? All I had to do was follow the 3-box system, and that low, once again, what does it do? Lines up with all the other lows, right? Liquidity is a byproduct of the way that you already view the market, as taught by yours truly, the 3-box, right? Because the 3-box already permits, like, when this becomes a low to be liquidated. That was my, that's the reasoning for this trade that I got into. Notice how that lines up already with all these points here. The market's impulses, if you're working from a left to right and your understanding of them as well as a target for them and then how to get involved on that with a lower time frame, is exactly what breeds profitability and confidence in this market, right? And you can do it for yourself. And again, that's not financial advice. Take it upon yourself. Go and study your own charts. Go and watch my previous videos and watch me break this down. And watch me break this down for you every single week. I do it all the time. And you can do it too. And that's the beautiful thing about being in this market. So yeah, I hope you're all growing as individuals. I'm so excited personally. It's August 18th and my daughter is due the 31st. I don't know if it's going to be before or a little bit after. So you might be seeing a little bit less of me. My private mentorship, I got you boys. I'm always going to be on there, with the webinars and everything else that we do there. That's my main focus and my main priority at all times. I do like 80-hour work weeks with the group. So, and I love what I do. But I hope this video helps some of you that might be using the free stuff. Maybe it starts to confirm some of the stuff that you've been learning in the private if you're there. Otherwise, I hope you all enjoyed this. I hope this market continues bearish, because if it hits this low, as we've been talking about for a while, that's going to be my first 200 RR for the year. So it's going to be an amazing thing to see. So hopefully we keep running on that trade. But also from this, I want you to take the fact that notice how you don't have to be fully correct about the actual target and allow market to run for you to make a ton of money and for you to make a ton of RR. And also, focus on this, because this doesn't breed much profitability. Although I've seen many people do it, and I've seen people in my own mentorship do it. This is my bias. This is what I'm biased towards. This is what I've always done personally. This is what I've studied. A lot of the greats that I've personally studied. So that would be Richard Wyckoff himself, Mark Minervini, Kristjan Qullamaggie, the Turtle Trader, Richard Dennis, Jerry Parker. So a lot of the traders that I've studied are really based and hone in on this higher R low enter, and they've made hundreds of millions of dollars from the markets, following higher R low enter strategies. And over time, I've converted a lot of people to that thought process, because, well, that thought process in my book is a lot better. But again, do what works for you. This market is completely individual based. It's independent based. It's not a competition against anyone but yourself. And I hope you're all growing individually. Have a great rest of your months. I hope they're very profitable. You're very happy. I personally am ecstatic. Thank you all for 100,000 on YouTube and everything. It's been amazing to see it happen. Fucking fly. It's been amazing having a lot of you in the mentorship and growing as individuals. And it's overwhelming personally to see the change that I've had in a lot of lives and what you guys have done for yourself. I've gotten tons of messages and I see them. I thank you all for them. I don't always get to respond to them, but I'm fully aware of it. I'm not even able to post them all. Like, I try to post some on Instagram, but it's crazy the difference that some people have made in their lives. You know, settling down and actually focusing on the stuff that I'm teaching you guys. And you can do a lot for yourself if you focus on it, you know? So let me know how your journeys have been. If you're still here, thank you so much for watching the entire video. It means a fuck ton to me. Leave a comment down below just to say hi. I love reading through the comments. I'll leave you probably a like and a little heart. And nonetheless, I'll see you all in the next video. Thank you so much. And by the time we're in the next video, if we've taken out this low, know that mentfx hit his 200 RR for the year. And I'll be really happy, and that'd be really cool. But nonetheless, you know, stick to your rules, stick to the process, and continue milking the markets. Because this has been beautiful delivery. You know, during a time when everyone is still in unprecedented times with all the news that's coming out, doesn't matter. The same delivery week after week, video after video. I've broken this down for you guys now for months, for weeks. You know, the same video every single time with a little bit of difference, a little bit of psychological talk, a little bit of showcasing as to what you can do with the concepts I teach you here. So it's your job to take it and use it, right? And you can. It's all right here. And if you want to go to the next level, surround yourself with people, you know, that are going to push you. Surround yourself with the psychological mistakes as well as things that you can do to improve your own psychology every single day. Check out the mentorship. You know, great course in there too. You're going to learn about a lot of confirmation techniques, a way of viewing the markets. It's a little bit different from the 3-box, but still based in it with a ton more depth. So yeah, and if you're absolutely killing it, check out mentfunding. Mentfunding is going to be around for a very long time, hopefully even past the day that I die. And yeah, you know, thank you guys so much. The 100K is unprecedented. It's amazing. You guys are all amazing. I'm happy to have shifted a big landscape in YouTube, at least in the trading industry, maybe even in the smart money space. It's been crazy to see the change in the entire space, and just to see how people are flourishing with these concepts. So thank you all very much, and I'll see you all in the next video. See you guys.